Welcome to Learn Commerce PU online classes. Don't forget to like our video and subscribe our YouTube channel for all the updates.
Hello students, welcome to Accountancy second PU online classes. In the previous class we have solved one problem on capital adjustment, but actually it was not capital adjustment because capital was not given in the problem. Now let me move on to the next problem. I'll take a third problem now because it is a case of capital adjustment plus there is without raising goodwill account we have to adjust the goodwill. So such a new concept is there. So let me take up third problem first, then I will take up that Jain, Gupta and Malik problem. Okay, let me read out the problem and in the meantime let us analyze and we'll solve the problem. The balance sheet of Amit, Bhima and Chandru, who are partners in a firm sharing profits and losses according to their capitals. Remember friends, this is one more concept here. So there are three new things here. One is profit sharing ratio is as per their capital. Don't think that as capital ratio is not given, that's a profit sharing ratio is not given, we should distribute in equal proportions. No, it is not, because instruction is very clear, profits according to their capital. So their capitals, it is given in the balance sheet, refer balance sheet. Amit's capital, Bhimu's capital and Chandru's capital 80, 40 and 40. So take the ratio 80 is to 4 is to 4 or 4 is to 2 is to 2 or 2 is to 1 is to 1, correct? So if you divide it by 4, then you will have 2 is to 1 is to 1. This is their ratio. So 2 by 4, 1 by 4 and 1 by 4, 2 plus 1 plus 1, that should be the denominator 4 and numerator as it is. So this is their profit sharing ratio. Remember, this is their old ratio. This is their old ratio. Now let me take up the liabilities of the balance sheet. Creditors, normal liability, no issue with that. Then capital balance is given, that is the opening capital balances by balance brought down in their capital accounts, correct? Then general reserve is there. You have already treated it in many problems, so it is not a new thing to you. You have to credit it to all partners capital account including retiring partner in their old profit sharing ratio. Remember, old profit sharing ratio, that is 2 is to 1 is to 1. Then buildings, machinery, stock, normal assets, debtors, there is a provision, make sure of it. Then cash at a bank. So any cash entries should be passed through bank, not cash. Remember, so any payment or receipt should be done through bank, that is bank account, not cash account, because cash in hand is not there at all in the balance sheet. And again observe the balance sheet. In the balance sheet, assets are written in the least liquid to most liquid order, reverse order, but let us solve it in a proper way. We will start with most liquid and we will end with least liquid asset. Clear? On that date, Bhima, here it is given Bhima, in balance sheet it is given Bhimu. Let us take it as Bhimu because Chandru and Bhimu looks nice, isn't it? Bhimu decided to retire from the firm and was paid for his share in the firm subject to the following. These are the terms of retirement. Let us see what are those. Buildings to be appreciated by 20%, you know it very well. Appreciation in the value of asset, increase in the value of asset is a profit to the business. So it should be credited to revaluation account. Should be credited to revaluation account and it should be added to the concerned asset in the new balance sheet. You know it very well, right? Then provision for bad debts is to be increased to 15% on debtors. What did they tell? Provision for bad debts to be increased to. That means that is the final figure, that is the final value, isn't it? So if you calculate 15% on gross debtors 20,000, So 3,000 it will come. So additional provision created is 2,000 rupees because already there is 1,000 in the balance sheet. Then now you are maintaining the PBD at 15% on debtors, means the final value of PBD should be 3,000. So additional PBD created is 2,000. 3,000 minus already existing 1,000. Clear? Done. Machinery to be depreciated by 20%. No doubt, depreciation, you know it very well, should be entered on the debit side of revaluation account because it is a decrease in the value of asset. Am I correct? Decrease in the value of asset. Then it should be deducted from the concerned asset in the balance sheet. Then goodwill of the firm is valued at rupees 72,000 and the retiring partner share is adjusted through the capital accounts of remaining partners. That means goodwill should be adjusted through capital accounts. That means we should not create goodwill. The word goodwill should not come in the entire solution. That is the meaning here. Total value of the goodwill is given 72,000. Retiring partner share is adjusted through the capital accounts of remaining partners, means continuing partners capital account debtor to retiring partners capital account. Continuing partners capital account debtor to retiring partners capital account. That is what the journal entry you have to pass. Very simple. So for that, first you have to calculate the share of retiring partner in goodwill. Then it should be distributed among the continuing partners in their gain ratio. And it should be debited to their capital old partner, that is continuing partners capital account. So remember this. The capital of the new firm is fixed at rupees 1,20,000 and it should be adjusted equally among continuing partners and adjustments are to be made in cash. Meaning is the total capital of the new firm is 1,20,000. See, I was telling while solving first problem, isn't it? Capital must be given. So 1,20,000 capital, and what did they tell? It should be adjusted equally among continuing partners. That means their new profit sharing ratio will be equal. Should be adjusted equally among continuing partners. So 60,000 and 60,000 should be written as two balance carried down. Then you have to balance and two cash, two bank or by bank, as the case may be, you have to do it. That's all. Very simple. So they told us to prepare revaluation account, capital accounts and balance sheet. Let us prepare revaluation account. First account is revaluation account. Start solving the problem. Revaluation account. Write debit credit. Isn't it? Yes. Debit credit column headings, particulars, amount in rupees, you can add JF there. Then again particulars, JF, amount in rupees. Write the column headings. Quick, let us solve it. Start with the buildings to be appreciated by 20%. What's the value of building? 1 lakh, right? So by buildings account on the credit side, buildings account, appreciation 1 lakh into 20%, am I correct? 1 lakh into 20%, yes it is. So 20,000, 20%, so 20,000 is the appreciation amount. Then next one is provision for bad debts to be increased to 15% on debtors. Provision for bad debts to be increased to 15% on debtors. So sundry debtors, we have to see how much it is. Sundry debtors 20,000, correct? So 20,000 into 15% to provision for doubtful debts. doubtful debts account. That is how much? You have to calculate 20,000 into 15% minus how much? Already existing provision of 1,000. So it will be 3,000 minus 1,000. 2,000 is the additional provision. Enter it in the revaluation account. That's what you have to do here. So that is 20,000. Yes, it is. Then machinery to be depreciated by 20%. So debit side to machinery account 20%, 50,000 is the machinery value. So machinery account depreciation I think it is 50,000. Yes, it is 20%. 50,000 into 20%. So it will come to how much? 10,000. Right? Yes. Then let me move on. That's all. Nothing will affect your revaluation account. Goodwill treatment will not affect, isn't it? Capital adjustments will not affect. So this much only. Close it. Find out the difference. I think credit side is greater. Yes, it is. So there is a profit. So 20,000. Anything else? Any other adjustments here which affects revaluation account? No. No, that's all. Only 3 items. Correct. Write the same total on the other side. 20,000. 20,000. So here 12,000. So 8,000 is the difference. Transfer to capital accounts to all partners capital account. All partners capital accounts. Accounts. Right. Write the names of the partners. Who are those? 3 partners. That is Amit, Bhimu and Chandru. Amit, Bhimu and Chandru. ABC I will write. Just write full names. Their profit sharing ratios were as per their capitals, right? So it will be according to their capitals. Yes, it is. So Amit 80,000, 40,000, 40,000. So it will be 2:1:1, 2/4, 1/4 and 1/4 into 8,000. 4,000 is Amit's share and Bhimu's share is how much? 2,000 and again Chandru's share 2,000. Yes, it is. So 8,000. Narration profit on, that is right here information, profit on revaluation balancing figure. Balancing figure. Profit on revaluation balancing figure. 8,000 is the profit, isn't it? Now let us give a working note here. That is we have to write working note here. Profit sharing ratio. Write note profit sharing ratio. Profit sharing ratio of partners as per their capitals. As per their capitals. Therefore share of each partner is yes, Amit, Bhimu and Chandru is equal to 80,000 is to 40,000 is to 40,000 or 8 is to 4 is to 4. Cancel the zeros in all partners' capitals, isn't it? Or divided by 4, 2 is to 1 is to 1. This is their capital ratios, profit sharing ratios. That is old ratio, isn't it? Then let us move on to the next part, that is capital. Before that, capital calculation of capital of the partners in new firm need not be calculated, because it is very clear 1,20,000 is given. They told equally, means 60,000 each. No need of any working note for that. You just calculate there only. Then anything else? 70,000. Goodwill of the firm, isn't it? That should be calculated. We'll calculate it later. Here only. So combined capital accounts of partners. Combined capital accounts of partners. Accounts of partners. Combined capital accounts of partners. Prepare it. Provide 3 columns each on either side. Write the names: Amit, Bhimu and Chandru. Write in full. Write debit credit is a must. Now let us start with starting point by balance brought down, right? Capital balances by balance brought down. I think it is 80, 40 and 40. Is it correct? Yes, it is 80, 40 and 40. Write the capital balances: 80,000, 40,000 and 40,000. Then credit them with the revaluation profit. Profit and revaluation is here 4, 2 and 2, isn't it? Revaluation account related to all partners capital account. So all partners capital account is credited by revaluation account. Revaluation account. Profit. Profit. How much? 4, 2 and 2. 2. Yes. Then there is I think accumulated reserve, general reserve is there, right? General reserve, yes it is. General reserve. Should distribute it among the partners. 2:1 is to 1. Old ratio. Old ratio. How much is the amount of reserve? 20,000. So 2:1 means 10, 5 and 5, correct? 10,000, 5,000, 5,000. This is their share. Then anything else? On the asset side, nothing is there, right? So goodwill treatment is there. Retiring partner share is adjusted through the capital accounts of the remaining partners. Now let us calculate here. Good calculation of share of note number 2. Calculation of share of goodwill of retiring partner. Retiring partner. Wasn't it? Retiring partner. Total goodwill of the firm. How much rupees? It was given in the problem. Refer. 72,000 rupees. 72,000. share of, who is the retiring partner here? Bhimu decided to retire, correct? So share of Bhimu is equal to how much? 1 by 4. 1 by 4 is equal to how much? 72,000 into 1 by 4. So it is 18,000. 1 by 4 means 18,000, right? Rupees 18,000. Make it as rupees 18,000. Share of Amit. Share of Amit in goodwill to be born. To be born. B-O-R-N-E. Share of Amit in goodwill to be born, and share of Chandru in goodwill to be born, isn't it? Is equal to 18,000 into which ratio? Gain ratio. Because goodwill is created to the extent of retiring partner share only without raising goodwill account. So only retiring partner share is created here, not full goodwill. So it should be in the gain ratio. What is the gain ratio? Old ratio is given in the problem, that is as 2:1:1. So Amit and Chandru, it is 2:1, correct? New ratio, it should be adjusted equally among continuing partners. That means equal partners, 1 by 2 and 1 by 2. Am I correct? 1 by 2 and 1 by 2 equal. So here what we have to do is we have to calculate gain ratio. Leave here, and gain ratio of partners. Gain ratio of partners is equal to old ratio minus, is it? Old ratio minus new ratio, is that correct? Gain ratio? No. New ratio minus old ratio. New ratio minus old ratio, right? Because new ratio is greater than the old ratio in case of retirement. This is a case of retirement. So new ratio minus old ratio. Therefore, is gain ratio is equal to his old ratio how much? It was 2 by 4. 2 by 4 minus new ratio is 1 by 2. 1 by 2 is equal to how much? 4. 2 minus 2 is equal to 0. 0. No gain. No gain to A. Therefore, C's gain ratio is equal to, what was his old ratio? New ratio. So here we did mistake. Did you notice? Yes. See, new ratio is how much? 1 by 2. We wrote old ratio. 1 by 2 minus, and old ratio was 2 by 4. 2 by 4. Same thing comes. Same thing comes, isn't it? So 4 is the common denominator. 2 minus 2 is equal to 0. But presentation was reverse. Answer is same. In exam, same thing happens. Students, they solve, but in a reverse way, and answer will come, but they never observe. Sometimes it comes as negative figure, but by ignoring the sign, they will write the fraction. So that's what will happen. So here again, C's new ratio is how much? 1 by 2, half, minus old ratio was 1 by 4, right? So how much? How much? 1 by 2 minus 1 by 4. 4 is a common denominator. 2 minus 1 is equal to 1 by 4. 1 by 4. That means the entire goodwill should be borne by whom? Chandru. Borne by Chandru. So what you have to do is, you have to pass the entry like Chandru's capital account debtor to that is B's capital account. Who is that? Bhimu's capital account. Chandru's capital account debtor to Bhimu's capital. Otherwise, if the gain ratio of A is Amit is 0, not 0, some fraction it comes, then Amit's capital account debtor, Chandru's capital account debtor to Bhimu's capital account. That should have been the journal entry. Here it is not like that, as only one partner gains, so we have to give debit to only one partner, not both. Remember. Clear? Yes. Now let us move on to the problem again. Here 18,000 should be borne by Chandru alone. So we have to write like this: goodwill to be borne by Amit is 18,000 into 0 is equal to 0. Here full goodwill borne by Chandru is equal to 18,000. Yes. So we have to debit Chandru, and we have to give credit to that is a Bhimu. So that is what you have to do. Let us move on to the problem here. So 18,000, you have to write one sentence here as the entire share of, that is Amit is acquired by, entire share of Amit is acquired by Chandru. The total goodwill of retiring partner Bhimu, total goodwill of retiring partner Bhimu should be borne by Chandru alone. That is what you have to do here. So let us move on. General reserve, it is credited, nothing else, no other things to be done. Now what we have to do is, capital of the new firm should be fixed first. So 1,20,000, correct. Goodwill treatment, let us give goodwill treatment entry by, we have to credit the retiring partner. Who is the retiring partner here? B. Bhimu is retiring partner. He should get the credit of goodwill. He should get the benefit of goodwill. So when you enter on the credit side, his capital balance will increase, doesn't it? So by C's capital account. Journal entry is C's capital account debtor, Chandru's capital account debtor to Bhimu's capital account. Chandru's capital account debtor to Bhimu's capital account. So Chandru's capital in Bhimu's account, how much? 18,000. No entry in this. Otherwise what happens? By C's capital account, Chandru's capital account, entry will come in the continuing partners, both the continuing partners. Here there is no gain ratio, so GR, gain ratio, isn't it? Then pass the opposite entry here, Chandru's capital account debtor to Bhimu's capital account. Here Bhimu's capital account debtor to Chandru's capital account, Chandru's capital account here 18,000. Give debit to Chandru, give credit to Bhimu and give debit to Chandru. That is what you have to do. To what? Bhimu's capital account. Gain ratio. Goodwill treatment. Right here, goodwill. So in the entire solution, goodwill word should not come. That is the main intention. That's all. Nothing else. It's over. Goodwill treatment is over. Then capital balances should be kept equal proportions, adjusted equally among continuing partners. So 1,20,000 is the total capital. Total capital is 1,20,000. So 60,000 each. To balance carried down. Write this first. To balance carried down. It's mentioned in the problem, right? So equal 1:1. So 60,000 each among Amit and Chandru. 60,000 each. Wasn't it? Then what they told, adjustments are to be made in cash. Adjustments are to be made in cash. Let us balance now. Let us balance their accounts. Leave one line gap. Then write the total. Wasn't it? Which side is greater? See, Chandru's capital account 42,547. Here 78. So write the total of debit side first. Higher side 78,000. And here he should bring cash, isn't it? So you have to pass which entry? Cash or bank? You have to pass bank entry, right? Cash at bank is there, cash in hand is not there. So by bank account, how much? 42, 47. So 47. How much? What is the difference? Calculate. 78 minus 47. So it will be 31,000. Correct. 31,000. Right here by bank account. Deficit brought in. Deficit brought in. Deficit brought in. Right there. Then. So 42, 47. 48, 30, 78, correct it is. Then move on to the other partner's capital account. Nothing is mentioned regarding his capital balance. What should be done? So transfer it to his loan account, right? So to B's loan account, Bhimu's loan account. Bhimu's loan account. Transferred balancing figure. Balancing figure. So find out the total of Bhimu's capital 42,547, 47, 8, 55, 65, right? 65,000. 65,000. Yes. Write the same total on the other side. 65,000. No debit entry. So itself is loan. 65,000 is the loan. Yes. Then Chandru. What about Chandru? Calculate. Credit side is greater. 84, 94,000 is there. Find out the difference. 94,000. There is one debit entry. 60,000, right? So 34,000 is excess in that is Amit's capital. So 34,000 to bank. Excess paid. Excess paid. This is balancing figure. Balancing figure. That's what you have to do. Here also it is a deficit brought in, balancing figure. That's all. Move on to the last part, balance sheet of Amit and Chandru. Amit and Chandru as on yes, write the date. What's the date? See the old balance sheet. March 31st. So April 1st, 2018. April 1st, 2018. Yes. Start with cash at bank. Cash in hand is not there. Cash at bank. Refer balance sheet. I think opening balance was 7,000 if I am not wrong. correct? No, 14,000, I'm sorry. 14,000 is the opening balance of cash. 14,000, yes, show it. 14,000 plus deficit brought in by Chandru, 31,000, minus excess paid, 34,000. 34,000. Are there any other bank movements? No, because retiring partners balance sheet transfer is loan account. Correct. So that much only. So 34 minus 31 plus. So 3 minus. So 14 minus 3, 11. 11,000 is the cash balance. Then move on to the next part, that is stock. Stock, there is no change in the stock, correct? So write it as it is, 18,000. Stock is 18,000, yes it is. Stock 18,000. Debtors, there is a change. So inner column 20 and provision for doubtful debts 3,000, correct? So 20 minus 3 minus PBD, the PDD, provision for doubtful debts 3,000. So 17,000. Then what else? Debtors over machinery 50,000. Machinery, there is a change, depreciation. So write inner column, write in inner column machinery 50,000 minus depreciation at the rate of 20%, correct? At the rate of 20%. So 10,000. So 40,000 is the net machinery value. Then buildings, refer the problem 1 lakh. There is appreciation 1 lakh, add appreciation at the rate of 20%. So 20,000, right? So 1,20,000 in outer column. Goodwill will not appear because goodwill word is not there at all in the entire solution, correct? No entry is passed with goodwill. Then move on to the liabilities side. Creditors, no change as it is 21,000. 21,000, yes it is. Then anything else? Reserve is transferred already. Just capital accounts, that's all. There is one more liability, loan account is there. B is loan account. B moves loan account, how much? 65,000. 65,000. Then capitals. How much? A and C, Amit and Chandru. Write the capital balances. How much? Capital balances by to balance carried down. We should write it as by balance brought down. Remember, by balance brought down, write this 60 and 60. 60 and 60. So right here 60,000 and 60,000. So 1,20,000. 1,20,000. So find out whether it agrees or not. $185, 206, is that correct? 2,06,000, is that the balance sheet total? Yes, it is 2,06,000. Yes, 2,06,000, it agrees. Yes, that is This is how you have to solve a problem. Or remember, most of times this will not happen. That is gain ratio acquired by one partner will be 0. This rare case, because this is a tricky problem, so they gave this. But if you refer the answer is something different. So balances, it is given capital balances, given are Chandru it is 40,000 and Amit 80,000. But it is very clearly mentioned the capital of the new firm be fixed at rupees 1,20,000. So, and it should be adjusted equally among continuing partners. Equally among continuing partners means what? You have to distribute that 1,20,000 into half, isn't it? So 60 and 60 it should be there. It is given in the problem as 80 and 40. Definitely it is wrong. So don't trust these answers. You just follow the principles and the rules to be followed in accounts and solve the problem. So this is how you have to solve a problem. Whenever see, there are many things here. First one is that is goodwill treatment without raising goodwill account, isn't it? Debiting and crediting capital accounts. Then capital adjustment is there. Again, one more point we have observed, capital ratio. Old ratio is not given in the problem. They told us to calculate on the basis of their capitals. So these are the 3 special points that should be highlighted, that has been highlighted in this problem. So make sure of these things. Solve the same problem and submit. Solve the same problem and submit as your assignment. Thank you for watching this video. Thank you.